How does Section 24 work when you have a job and rental income? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. As an individual, when you have property in your own name, you are going to be impacted by Section 24. As an individual who has properties in their own name, you're going to be impacted by Section 24. Now, the key thing here is how are you going to be impacted? And on today's video, we are going to have a look at the tax calculation on how you are impacted if you are working full-time. Our examples today are going to cover off a basic rate taxpayer and a higher rate taxpayer to give you an idea of how the calculation fits together and how it all works. So you can potentially plug in some of the numbers that you're working with to see how that is going to be impacting. Let's dive into the calculations. Let's jump into example 1. So this one we are going to start with a salary of 30,000. And for this person, we are going to have some rental income, which comes to 15,000. We've got mortgage interest that we will have paid during the year of 5,000. And we've got some other repairs and other expenses that we need to take account of 2,000. So let's have a look firstly at what our total income is for income purposes. So we've got a gross salary of 30,000 and then we've got our rental profits, which will be 13,000, which is our 15,000 take away our 2,000, and we're going to ignore our interest for now. This gives us a total income of 43,000 that we will then be dealing with. Now, before we go into the tax calculation, let's have a look at our finance costs to see how this fits together. So for this element of things, we need to look at the tax reduction, which is the lower of 3 numbers. So our first number that it is going to be the actual finance costs, which for this example, we've got interest of 5,000. So that is our first number. We then have our rental profits, which is our 13,000, which is our 15,000 take away the 2,000 to give us our 13,000. And the final figure we need to look at is our adjusted total profit, total income. And this is our 43,000. So for this example, we're going to have the lower of these 3 numbers, which will be our 5,000, which we will bring into the calculation in a minute. So let's jump into our tax calculation now, which we start with our total income, which is our 43,000. We can take off our personal allowance, which at the time of recording this video is 12,570. This figure will need checking if you're doing this at a future point if this has changed. This gives us our taxable income of 30,430. So now this will all be taxed at 20% because we have not gone over the high rate thresholds. So this gives us a tax figure of £6,086. Now we need to bring in our finance cost reduction, which is the lower of our 3 numbers, which was our 5,000, which we now can get a 20% tax credit. So 5,000 at 20% is 1,000 that we are going to be taking off that to give us a total tax that is payable of £5,086. Now, to add just the next stage on, obviously because you've had a job, you will have actually already paid tax in that job, which actually means we've got some tax paid at source. So you don't have to pay this for a second time. This will get taken off the tax that you are liable to pay for the year. So in this example, we paid £3,486, which means the actual tax payable that we've got to pay is only £1,600. Now, one extra stage to just mention at this stage is because that tax bill is over £1,000, there is the possibility that they may want you to pay payments on account, depending on whether 80% of your tax bill has been derived from tax at source. If that's the case, there'll be no payment on account. If, however, there isn't, then you may need to start paying a payment on account, which would be the £1,600 in January for the tax bill payable and 50% of next year's tax bill, which is 50% of what you've just paid, to make £2,400. The July payment would then be the other 50% of the tax, which would be £800. So it's just something to watch out for if you're going over the 1,000, depending if you fit the criteria. Let's move on to example 2, and in this we're going to look at someone who has a slightly higher salary, and this one we're going on to is at 65,000. So as you can see, it's going to be a high rate taxpayer at this point. We've also got 18,000 of rents to deal with, and our interest is going to be £7,500 this time. We've got some repairs and other expenses like insurance and bits like that, which is going to be £2,000. So let's again start with the gross salary, the gross income. So we've got our salary of 65,000. We've got our rental profits, which are 16,000. Which is our 18,000 rent, take away our rents and insurance and things like that. This gives us total income of 81,000. So we're very much into the higher rates of tax. So let's have a look at our finance costs to see which figure we are going to be incorporating into our calculation. And this is the lower of our 3 numbers. So our first one is going to be our finance costs. So our finance costs is our interest costs that we have incurred. So these finance costs for our year are 7,500. So this is our 7,500. We then have our rental profits, property profits, which today are 16,000, which is the 18,000, take away the 2,000 to give us our 16,000. And then the final one is total adjusted income, which is our 81,000. So hopefully, as you can see, we've got our 81, 16 and 7,500. So the lower of these is our 7,500, which we'll be bringing into the calculation for the tax in a moment. So let's jump into our tax calculation next. So first we need to take our total income. Which is 81,000. We can then take off our personal allowance, which in the tax year we are currently in as this is recorded, is 12,570. This will need adjusting if and when the tax changes. This gives us 68,430. So we therefore have 20% bracket, which is at 20%, which is giving us 7,540 of tax to pay. We've then got our tax at 40%, which is the balance from above, take off what we've taxed at 20%, which gives us a tax position of £12,292. So we're now paying tax on £19,832. Now we can bring in our finance costs adjustment and take off the finance cost, which is £7,500 at a 20% tax credit, because even though we're a higher rate taxpayer, we still only get a 20% tax credit. So this equates to £1,500, which gives us a tax liability for this period of £18,332. Now obviously, because we are in a job, we've already paid tax at source. So we can now bring this in, not to the calculation, to what is due for payment. And on this occasion, we have paid £13,432, which leaves us with a balance to pay, which now comes down to £4,900. From the calculations, you can see how much tax you would have to pay. Now, I will note that the amount that we've got there is the total amount of tax that we need to pay. So any tax you have paid in your employment already will be deducted from that figure, and you'll only have to pay the net figure. But as you can see, as always, there is twists and turns in the tax calculations to make life interesting. And from here, hopefully it gives you an idea of how it may fit together for you. Hopefully today you've got an idea of how it fits together with your PAYE job and your rental income, and what tax you're likely to be paying, so that you can plug those numbers into the calculations to see how it's going to impact you. If you have any questions, then please do leave a comment, and let's make tax less taxing. Let's make tax less taxing.